because this is only accessible to the ultra high net worth individuals usually. So you need to pretty much have at least 10 million plus to even be considered to have these options. And that means that the people who put in the biggest part of this is, congratulations everyone who's listening, it's your pension funds. So your pension is here in private credit, whether you want it or not, whether you know it or not. Also, big insurance companies are also using this to have cash flow, for they get premiums, and the premiums should last maybe many years. And now they can take your insurance premium, keep it in the bank, but the bank is now private credit, which means they have like 20% interest, and they also keep your principal. And usually you will never even claim your insurance, which means after 5 years, they have got still your money to cover the insurance, which you never claim. That's 100% of all the money. And now they got 20% interest on interest, which means they've doubled the money and you didn't make an insurance claim. It's a solid business. And you also have family office. So basically they make 200% return on the money for zero exposure, really. Family offices, wealthy investors are, of course, prime for this as well. So this is super exciting because most people have no idea it exists. So that's why I love to dive into it. So who do they give the money to? Mid-sized companies, real estate projects. It might be so-called leveraged buyouts, so a company buying companies and more. It could be infrastructure like railways, roads, bridges, and so on. Why? Because it's long term. And it's safe. It might even be like government backed, the project. So it's part of like the whole pie of how to fund it. They might have something from the government, something from the bank, and then their own money is private credit money, which means that...
Yeah, that is a high leverage situation.
Exactly. So the equity they put into the project might be zero or negative.
If it goes well, that's probably one of the best deals of all time.
Exactly. So
you get free money, and then you get really high return.
Exactly.
That's amazing.
So investors, they get really high yield, and usually they have a high level of security. They also have to give up liquidity. Why? Because they usually lock in the funds for a long time, which we'll explain further what it means in a second.